Hello, everyone, and welcome back. Rivian Automotive is once again in the spotlight as investors prepare for another important earnings report. Shares are trading around $16.70, while Wall Street's consensus price target sits near $18.50. More importantly, the most bullish analysts believe the stock could climb as high as $25, representing roughly 50% upside from current levels. But is that target realistic, or is it simply too optimistic? Today, we'll examine Rivian's latest fundamentals, analyst expectations, technical outlook, and the key catalysts that could determine where the stock goes next. According to Wall Street analysts covering Rivian, sentiment remains cautiously optimistic. The average 12-month price target is approximately $18.54, suggesting moderate upside from current levels. However, analyst estimates vary considerably. The highest published target is $25, while the lowest target is $13. This wide range reflects uncertainty surrounding Rivian's path toward profitability and future vehicle demand. The company's upcoming quarterly earnings report could become the biggest catalyst for the stock. Current consensus estimates call for revenue of approximately $1.52 billion, earnings per share of negative 66 cents. Investors will pay close attention to several key metrics, including production numbers, vehicle deliveries, gross margin trends, operating expenses, and management's outlook for the remainder of the year. Forward guidance may ultimately prove more important than the quarterly results themselves. Rivian continues to operate in an investment phase. The company generated roughly $5.39 billion in annual revenue, but remains unprofitable, reporting a net loss of approximately $3.65 billion. While these losses remain substantial, there are encouraging signs. Vehicle production has improved, manufacturing efficiency continues to increase, management remains focused on reducing operating costs while expanding production capacity. Investors are now looking for evidence that these improvements can translate into stronger financial performance. One of Rivian's most important long-term growth drivers is the upcoming R2 platform. Unlike the premium-priced R1 lineup, the R2 is designed for a broader consumer market. A successful launch could significantly expand Rivian's addressable market, increase production volumes, and improve manufacturing efficiency through economies of scale. Many analysts believe the R2 represents the company's most important product launch to date. Although Rivian continues to report losses, liquidity remains one of its major strengths. The company maintains a sizable cash position, providing management with flexibility to continue investing in new products, manufacturing expansion, and technology development. This financial cushion reduces near-term bankruptcy concerns and allows Rivian additional time to execute its long-term strategy. However, investors will continue monitoring quarterly cash burn carefully. From a technical perspective, Rivian is trading near $16.70. Immediate support is located around $15.50, while stronger support exists near $14. On the upside, resistance appears near $18, followed by the psychologically important $20 level. A decisive breakout above $20, supported by strong earnings and increased trading volume, could open the door toward the $22 to $25 range. Failure to deliver positive earnings could instead push shares back toward recent support levels. Bull case. The bullish scenario depends on several factors: better than expected earnings, improving gross margins, strong R2 demand, positive production guidance, continued cost reductions. If these catalysts materialize, analyst targets near $25 become much more achievable. Bear case. The bearish scenario includes slower EV demand, larger than expected losses, weak guidance, increased competition from Tesla and traditional automakers. Under this scenario, the stock could revisit the $13.15 range. Overall, Rivian remains a high-risk, high-reward growth company. Wall Street generally expects gradual improvement rather than immediate profitability. The consensus target suggests modest upside, while the most optimistic analysts believe successful execution could justify a move toward $25 over the next 12 months. For investors, the upcoming earnings report may provide the clearest indication of whether Rivian remains on that path. So, can Rivian reach $25? The answer is yes, but only if the company continues improving its financial performance, successfully scales production, executes the R2 launch, and delivers stronger than expected guidance. Without meaningful operational progress, the stock may struggle to sustain a move above $20. As always, investors should focus on the company's execution rather than short-term price fluctuations. If you enjoyed today's analysis, please like the video, subscribe to the channel, and let me know in the comments. Do you think Rivian will reach $25 within the next year? Thank you for watching, and I'll see you in the next market update.